Thank you for tuning in to another edition of Meet the Visionaries podcast, sponsored by the MIT Center for Real Estate. Today, Daniela Morales, a master's in city planning candidate here at MIT, interviews someone I had the pleasure of meeting a few weeks ago, Mr. Mahbod Nia, CEO of Veris Residential. In this episode, Daniela and Mr. Nia discuss leadership styles, creating and maintaining an inclusive company, and ways in which the Veris leadership team measures the impact of its initiatives. Take it away, Daniela.
Hello, everyone. My name is Daniela Morales. I'm a first-year master's in city planning student here at MIT. Today, I have the privilege to interview Mahbod Nia. Mahbod Nia is Veris Residential's Chief Executive Officer and has served as a member of the Board of Directors since June 2020. Mr. Nia has over 20 years of real estate industry experience across multifamily and office investment, management, financing, and advisory roles. Before joining Veris Residential, Mr. Nia was the CEO of Northstar Realty Europe Corp., also known as NRE, where he served as a member of NRE's investment committee and board of directors. Previously, Mr. Nia held various positions within real estate groups at Goldman Sachs and Citigroup Inc., where he began his career. Mr. Nia holds a degree in economics for business from the University of Westminster and a master's degree in economics and finance from the University of Warwick. Welcome, Mahbod, to the podcast. Thanks for joining us.
Thank you, Daniela. It's a pleasure to be here.
It's a pleasure for us. So we'll just get started with a few questions about you, about strategic leadership and transformation. So Veris Residential underwent a strategic transformation under your leadership, transitioning to a pure play multifamily real estate investment trust. Can you elaborate on some of the key initiatives and decisions you implemented to lead the company's new strategic direction?
Sure. So I took the helm 3 years ago, almost to the day, having been on the board and served with my fellow board members for about 6 months prior to that. And really, pretty much the first thing I did was, in collaboration with the board, communicate to the outside world our go-forward strategy, which was to be focused solely on residential. And that was a combination of a few factors that led to that. Firstly, in the REIT space, REIT investors, and you have to bear in mind that as a REIT, and there are some 200 of them, investors have a choice in who they invest in. And so your business needs to be attractive to them, just like any other product that consumers buy has to be attractive relative to competing products. And one of the things they demand is that you focus on your strengths. And our strength historically as a company, or our focus historically, was office. But the future for us was very much in the residential sector, where we saw much stronger underlying fundamentals for the multifamily sector, particularly in the markets that we're in. So we announced really on the first day that we would be divesting of all office and seeking to focus on our strength, which was the residential sector. Now, for what was Matt Cali back then, our residential business was a subsidiary of the company that was acquired some years ago. There was a developer in the name of Roseland. And so the challenge here was you had really two companies within one. You had Roseland and you had Matt Cali, with two different cultures, two different vertical cost structures. You had a lot of duplication of cost, and different skill sets. And so the challenge was to manage through that and exit the office strategically and pivot towards the multifamily, but in doing so, collapse what was two companies under one umbrella into one company, simplify it, reap the cost savings that come with that, but actually, just as importantly, unify everybody behind a single strategy and a single brand. That's really what we've done over the last 3 years. And in terms of just the hard stats, we've gone from being around 2/3 office, just over a third multifamily 3 years ago, to now we've rebranded to 100% multifamily. To go through that journey, we've sold over $2.5 billion of predominantly office in over 50 properties. We've developed 4 large super class A multifamily properties that's given us about 1,600 units, and acquired one in the James. It's another 240 units. So we've sold office and we've grown multifamily largely organically to get to just over 7,500 units now and 100% multifamily as a business. And not only that, but with the terrific team that we've got, as a relatively new multifamily company on the block in the public space, we've overlaid a new operating platform that encompasses new people, processes, and technology that has allowed us to extract the real value, the full value from our underlying assets in a manner that's resulted in now 2.5 years, 10 consecutive quarters of posting results that have beaten all of our peers. And that's something I'm particularly proud of, because assets don't manage themselves. Our team does that.
Definitely. Wow. I mean, those are crazy numbers that you're putting out, especially for only a few years, going from 2/3 office to fully multifamily residential. It's impressive. I want to know a little bit about how your diverse career journey has influenced your approach to leadership, and how that's helped you in decision making in the real estate sector, and what lessons you might have learned that contribute to your success now at Veris Residential.
It's a great question, Daniela. And I consider myself very fortunate, candidly, because coming out of college, show my age here now, but I started working in 2000, so 24 years ago. Coming out of college, I didn't know enough to know what I wanted to do, but I wanted something that was going to be challenging and rewarding, and investment banking seemed like what that would be. And so I'd set my sights on that, and against the odds, managed to secure a role at what was then Solomon Smith Barney, which then became Citigroup, on the investment banking side. So I started off in investment banking, M&A, capital raisings, etc. Really just learning the basics of analyzing companies and corporate financials and valuation of companies. But I think within a few years, I realized that probably wasn't right for me. And I had an opportunity to transition to the real estate lending side of the business, securitization and real estate finance, which to me was more interesting because I could really contribute more, I felt, particularly when it came to structuring, and no two loans are the same. And so you're making very bespoke loans to large players, private equity firms and other shops that you would know today. And so, taking a blank canvas in your structuring, and I found that interesting. But I always felt like I'm watching from the sidelines, and I really want to be the one investing, not the one providing the debt to those investing. But it's very difficult to transition from one area to another. So to go from investment banking to real estate finance to then onto the principal side it's a very difficult journey to make. Often because you just get boxed and, he's a debt guy, or no, he's a banker, he can't do, lending, or he can't invest. And so it was a difficult transformation to go to ultimately where I felt most comfortable and just felt most natural to me, which was the principal side, the investment side. But I was fortunate to be able to make the transformation, and having gone through that, I feel like that's what's really equipped me to be able to do my job today, because I deal with a very diverse range of things from day to day. So it may well be something that is related to analyzing a company. It could be our company. We're constantly doing different things in the market, new financings. I know exactly what I'm looking for when I look at a term sheet. I know exactly what's important to me when I look at loan agreements, because I've done that job. Mm-hmm. Or when it comes to investing, having gone through that process on the principal side, I have the ability to be able to analyze information and take a view on both where we are in cycles, and how compelling any opportunity is on a risk-adjusted basis that we may look at. And so it's been extremely helpful, candidly, to have gone through that journey and then land where I now feel most comfortable and interested and challenged, where I can bounce around from one area to another, and whether it's dealing with a structuring issue or an operational issue, having been through that. And then after all of that, I having the North Star Realty Europe experience, I mean, that was very directly relevant, I believe, to this role, in that was also a transformation. I worked with North Star to set up their European platform, which subsequently became North Star Realty Europe. But we're a very diversified business with assets across 5 different asset classes, 9 different countries. And I go back to my earlier comments that investors wanting to focus on one thing that you're good at and show them you're good at that. And so having set it up as what was quite a diversified business, streamlining that, creating a lot of value in the process, growing that NAV there by over 40%, reducing leverage by 20%, reducing operational expenses by a third, and then ultimately exiting that was all very directly relevant experience to what we had to do here as well. So I think I've been very, very fortunate, and I feel almost like everything that I've done in my career, even if I enjoyed some of it more than other parts of it, it's all ended up being very relevant and all kind of part of a broader plan in some ways.
Well, thank you. Yeah, it sounds like such a great range of experiences has really led you to kind of create this personal leadership style and like approach to the work. And I just wanted to ask a little bit more about how this leadership style kind of helps you address the different needs of different stakeholders that you work with, and even working with your team at Veris, how that kind of helps you be the CEO of a public company like that.
You'd have to ask my team. Hopefully they would agree, but I'd like to think I'm a team player. I definitely feel very much like I need my team, and that everyone has a contribution to make. And I listen, and I may agree, may disagree, but I want to hear people's thoughts. So I'd say my leadership style is very inclusive and team oriented, and kind of no nonsense. Like I don't tolerate or like politics or negativity. I just want everyone to focus on the task at hand. I'm naturally a problem solver. Like that is actually what really gets me interested, is when there's a problem and we've got to come up with a creative solution to it. I just want a team that is committed, shares my values and hence the company's values, which are really about kind of professionalism, integrity, and ultimately working together to make progress. And that's one of my mantras, is every quarter we have to make progress. And so we have, the outside world will see results one quarter at a time. We plan several quarters ahead and have our own internal goals to try and get there. And so, and I couldn't do any of that without my team. And so I think it's about having the right team, having a very clear strategy and vision that everybody understands, and then understands their role in that to be able to get us from A to B. And then making sure everyone's aligned and incentivized to get us there.
That's wonderful. Yeah. Just speaking to that progress and planning ahead, I know that Veris Residential has a pretty strong ESG commitment and places and strong emphasis on sustainability. Can you elaborate a little bit more on the specific initiatives or practices that highlight your company's commitment to environmental, social, and governance principles?
Sure. I would say, very simply, we believe as a company that while our jobs are to, our fiduciary obligations really are to maximize shareholder value, we believe that you can do that in a environmentally and socially responsible way, or you can choose to not do it in an environmentally and socially conscious way. So really for us, it's not about compromises. It's about just doing the job at hand, which is to maximize shareholder value, but going about it in a manner that can actually help address wider issues that these are just risks that our business and every other business faces. Climate change is a risk and has a real cost associated to it that we face and every other business faces. So you can choose to ignore these risks and the resulting costs that will come back and bite you and be part of the problem. Or you can actually see it as an opportunity to be part of the solution while going about things in the ordinary course of business and really create value for your shareholders as you do it. So the way we approach these things, and I'll give you some examples, smart thermostats for us, the payoff period on these things is less than a year. But the energy savings you can reap are tremendous. And that's great for the environment, but it's actually great for our NOI margins as well, because we're not throwing money down the drain and burning fuels to warm or cool areas that don't need to be warmed and cooled, but historically would have been with manual thermostats. Low flow fixtures, efficient appliances, beehives that we have installed now across 15 of our properties that promote biodiversity. Veris Farm is a concept that we came up with a couple of years ago, where we've taken underutilized spaces across a number of our properties. So it could be retail space, for example, that we've not been able to lease and has been vacant, or other space that isn't really being utilized, and converted them into what we call Veris Farm, which is vertical hydroponic planting of herbs and vegetables. And so this is soil-free, organic planting of vegetables and herbs. It is done under conditions that also just promote much more rapid growth than normal, about 3 times faster growth than normal. And we share these with our residents, and we pay for it through a small increase in the amenity fees that we charge. When you look at the return on investment from such things, it's very, very compelling as just even a standalone investment. But what it does is it also just allows us to be able to solve for a greater problem than just returns, but while actually promoting returns and boosting returns, which we're doing with a number of these things. And so, I would say the way we approach things is to look through a lens of ESG throughout our business. So if a boiler breaks down, what would a typical real estate company do? Let's say, can we tender that out to replace that boiler with a new boiler? And that may well be what you have to do for restrictive reasons, but actually, are there alternatives? Could we utilize heat pumps, air source heat pumps? Are there subsidies available to us, which actually having a large concentration in New Jersey, we're in a state that's very supportive of environmentally friendly capital expenditures. So there's subsidies we can capitalize on as well that possibly make some of these initiatives environmentally friendly and more cost efficient to us. And so it's really looking through that lens and say, is this beyond just sort of doing things the way we've always done them because that's how we do them? Is there a better way of going about doing whatever it is that we're about to do that can promote returns, reduce our carbon footprint, reduce our expenses, or some combination?
I think similarly in that vein, I'm wondering, in what ways Veris measures the impact of these sustainability initiatives, and also just different initiatives like the ones you mentioned, community building efforts, and how you track the progress and assess the success of these different approaches.
We do. I think the most important thing really, and it sounds simple, but it's not, is to first understand your baseline when it comes to your carbon footprint before you can set yourself targets publicly or privately, or measure against those targets. You need to really understand your baseline. And that's not always easy to do. I would say we're definitely ahead of the game in that sense. And we do look at, our scope 1, scope 2 emissions. We measure, and we've seen a significant reduction of actually over 50% in our scope 1 and scope 2 emissions over the last 3 years. We also look at the number of our buildings that are green certified, and we've gradually targeted and increased that number to now 80%. So 80% of our buildings are now green certified. The next step is to move to scope 3 emissions. And, what I would say there is we're also very much ahead of the game there. And that's a lot harder, as you'll know, to measure scope 3 emissions. But right. We're working towards, I think, a very good outcome there in understanding our scope 3 emissions.
Yeah, it sounds like you all are doing really, really interesting work and pushing kind of where you can go next with it, and going back to that forward thinking piece, which I appreciate coming from an environmental perspective. So I'm going to transition a little bit and talk a bit about Veris's partnership with MIT's Center for Real Estate. And so currently Veris has this strategic partnership with the MIT Center for Real Estate to research, develop, and implement innovative solutions for advancing and optimizing multifamily real estate operations. Can you provide a few specific examples of areas or challenges within the real estate industry that Veris Residential aims to address through this partnership?
Sure. Yeah. I just want to start by saying, actually, we're very honored to be working with MIT on this partnership, and we're very excited about what we can achieve together. And it's been a very, very collaborative and very fruitful partnership so far. At the moment, one of the themes running through the industry, that's really focusing on decarbonization, is the wholesale electrification of buildings, which is not an easy thing to do. And actually it gets complicated, because even if you're electrifying everything, then where does that electricity come from ultimately, and how does that impact your scope 1 and scope 2 emissions? But that's one area where we've been working with MIT in this partnership to really gather and centralize a lot of information, a lot of detailed information about our properties. And so it's going to be structural, operational, but everything that you would need to be able to, even the equipment that's in there, to be really be able to understand where the emissions are generated, even actually engaging with staff to understand the operational side of it, like how are we going about doing things day to day. And then what we're seeking to do is really leverage the expertise there at MIT to model through different scenarios to truly understand what we're doing right, what we could do better, and how we could potentially go about improving the carbon footprint from that building. And some of that might be operational, some of it might be retrospective investment within the building. But it's coming up with a path to then be able to analyze and say, okay, now how does that then fit in with our goals or fiduciary obligations, really, of also maximizing value for shareholders. So you overlay the two on top of one another. This is what we could do, and then does it make financial sense, and where are those boundaries that we can push to?
Great. And I know the feeling is mutual with the Center for Real Estate. We're very excited to work with you, and I know that a lot will come out of this partnership. So I wanted to ask a little bit about the cross-departmental employees and groups at Veris, and how these groups are exploring solutions to reduce the company's carbon footprint and generating operational efficiencies. And so I was wondering if you could provide a few more examples or types of innovative solutions that the company is currently working on or plans to explore in this vein in the future.
Sure. So I think that's one of the areas where we've sought to create a culture of this sort of cross-pollination of thought and collaboration, because no two buildings are the same. People that sit in different areas of the business may have a different perspective or different incentives when it comes to their roles. But I think we've done a pretty good job, and we'll continue to be doing an even better job going forward of creating that teamwork being really important within, one of our core values. And what we've done through the rebranding, and it's not just a name change, it's really reflective of our core values as a company, is planted a seed. And so people know now within the company and hopefully outside, they know what we stand for, they know what we value, they know we operate a very meritocratic environment where if you have a great idea, I want to hear about it. Like whether it's specific, it relates to your role or it doesn't, please speak up. And that's led to some really interesting results. We announced last quarter that we'll be starting soon a wholesale renovation, a significant renovation of one of our larger buildings, Liberty Towers in Jersey City. It's a 648-unit building. It's about 20 years old, although it has been refurbished since it was built, but it needs a pretty significant modernization. We're going to be investing around $30 million in that building over the next 3 to 4 years. We've got a lot of detailed information about that building and how it operates. We've got good comparables in newer buildings, including even in the area, that give us a benchmark for what could be achieved potentially through different initiatives that we've got. And, it's simple things like, particularly in an older building, it's like the smart thermostats that I mentioned earlier. It's upgrade of the existing P-tax. It's introducing new leak detection systems or introducing EV chargers. And so it's really looking at what we've done elsewhere, what's available in the market that maybe we haven't done that potentially could be trialed and could be rolled out. And then at any point in time, coming up with a plan that is, again, balanced and focused on value maximization, carbon footprint minimization, expense minimization, and implementing it. And sometimes these are physical investments, but honestly, one of my favorite stories, and when I talk about sort of that seed being planted, is another property of ours where one of the maintenance engineers independently proposed the idea, and it's going to sound completely logical, and why wouldn't you do that? And I promise you, many, if not most other companies do not do what I'm about to describe. But came up with the idea of why don't we switch off the boiler that heats up the water that heats the communal areas, and this boiler fires up 365 days a year, and then depending on the thermostat, it will either send that water into the communal areas to heat up the space or not, but it heats up 365 days a year. Now, between March and September, it's hardly ever utilized. It just heats up the water and then the water cools down. Why wouldn't you just turn it off? Mm-hmm. Now, there are some minor maintenance related considerations for a boiler that you switch off for 6 months. But through that proposal that came from one of our maintenance engineers, we've saved 50% on our gas bill in that property. Now, that has a direct impact on our NOI. So that is creating more value for our shareholders, but it's also cut our carbon footprint from gas in that building by half. Why wouldn't you do that? And it's the simplest thing, but you have to plant the seed and people have to think about this. Like, I wouldn't have known we even do that, if I'm being honest with you. But
Right.
It's a good example of how you can even just, at zero cost through just behavioral and operational changes, have a meaningful impact, both value creation for shareholders and environmental impact.
That's such a great example. And I really loved that idea of planting a seed. And I know we're coming up to our time soon, but I wanted to kind of explore that idea of planting a seed and ask, like, how does the collaboration with the Center for Real Estate kind of influence the ongoing education and professional development of Veris Residential's team? And if there's any specific knowledge sharing programs or initiatives currently in place?
Yeah, it's definitely a broad partnership, really extends beyond our ESG and sustainability team. Our operational teams regularly check in with the MIT research team, as well as their educational resources on various, whether it's energy efficient equipment or participating in industry events and networking, and allowing us to expand our knowledge, our network, and our breadth of supplies. As an example, our current solar advisor is a firm that we met through an MIT event. So it's been a very broad-based and helpful partnership to us.
Wonderful. Mahbod, I just want to thank you again for joining the show today. It's been a pleasure to get a chance to talk to you and learn a little bit more about you and the initiatives happening at Veris.
Thank you, Daniela. Thank you so much for having me. It's a pleasure to be with you, and it's an honor to work with MIT, and really enjoyed the conversation.
Thanks to our listeners for tuning into another edition of Meet the Visionaries podcast. And please remember to stay tuned for future episodes by subscribing to our podcast or follow us on social media by visiting cre.mit.edu to learn more. Until next time, take care, listeners.